the managing director of the company, joins in now. Good morning, sir, and thanks so much, for joining in. How much of the drop in the disbursements that we've seen in the quarter gone by can you attribute to demonetization, and what has been the recovery? If you could give us what the disbursements figure has been for the month of January and your projections for the coming months.
Good morning. So the last quarter was quite an eventful quarter, as we all know. Our disbursement was down by about 17% on year-on-year and 24% quarter-on-quarter. But our overall advances did grow by about 30% compared to last year, and our net interest income also grew by about 48% over the previous year. In terms of total assets, we had grown by about 50%, basically because after converting into a bank, we also got a lot of investments on the books now. So the overall assets grew by about 50%. On the collections, there was some stress during the last quarter, but we did use the RBI dispensation of that extra 60 to 90 days of recognition norms. So our GNPA from 2.54 of second quarter marginally dropped to 2.45% in the third quarter. If we had not used the RBI dispensation, the GNPA would have been 2.95%. So there would have been a jump of about 0.4% in the GNPA. And as a prudent measure, we did make an extra provision of 15 crores for the third quarter, just as a prudent measure. Going forward, of course, we don't give guidance as such, but typically the fourth quarter is the largest, the peak season for all lenders. And with the demonetization effect kind of more or less out of the way, the currency supply has come back quite well in the market. So all of us, I think we expect the fourth quarter to come back to reasonable levels of normalcy.
All right, Mr. Vasudevan, I think the street likes what you're saying as you speak. In fact, the stock has moved to the high point of the day. But I want a couple of more details in terms of your disbursements. Geographically, I think you have 50% of your exposure to South India, and then the remainder is split between West as well as North. Where exactly was the pain? Why did the disbursements come in lower by around 24% or thereabouts? Could you tell us geographically where was the pain? And in terms of AUM growth, you're talking about a 30% growth on a year-on-year basis. Though on a sequential basis, it's up only by around 1 to 2%. What can that growth be going ahead?
Yeah, in terms of geography, the south was reasonably not impacted so much. The impact was much more in western parts. North also was not really so impacted. Mostly we felt from our perspective, at least the impact was more on the western region.
Okay.
And in terms of the AUM growth, yes, it was just marginal 1 to 2% growth on a quarter-on-quarter basis, because basically your current disbursement was down, so naturally the AUM growth on a quarter-on-quarter is quite low. But as I said earlier, this quarter is a peak season, and hopefully if disbursement comes back to normal, then our AUM growth should come back to some reasonable levels of growth. And of course, during the last quarter, we also opened a lot of our liability branches. We became a bank in the month of September 2016. And as of December, we had opened 112 liability branches. So 112 liability branches are now up and running. And we do expect a good amount of impact or benefit because of the demonetization and the digitization drive of the government. We expect a good amount of benefit from the liabilities perspective, because even in these 3 months, we have been able to set up all our basic digital banking services platforms in place. So our mobile banking or net banking, our wallets are all in place now. And we also started doing the POS acquiring business. So already, as of December, we had already deployed 112 POS machines in various merchant establishments. And there's a lot of drive to do the POS machine installations in merchants also. Okay. There's a lot of demand coming from the market today. And luckily, we are kind of very well placed from a digital position to meet that kind of demand.
So we're running out of time, so let me once again come back to the kind of recovery we should expect in Q4. If you could tell us what the actual disbursements were in Q4 and in the month of January, and therefore for the entire quarter, what we should expect, and also can we expect an improvement in your asset quality? Has the stress on collections eased?
See, short of giving a guidance, which we don't do, as I said, the fourth quarter should be good because it's always the peak season. We expect a good disbursement in all our other products such as our vehicle finance, MSC and housing. As far as microfinance is concerned, there are certain places where we had a stress on collections in the last quarter, and that stress continues even in this quarter. So our microfinance is going to be lower than the previous year's same quarter. So microfinance is not going to be in line with a growth estimate. Microfinance disbursement should be down, but other products, the stress on collection is, there's hardly any stress on collection now. The initial cash crunch kind of thing has, kind of gone away. So the rest of the products should probably continue to perform, as a normal fourth quarter performance.
All right, so very quickly before we let you go, this quarter around, the ratios are not looking good at all. I mean, maybe it's a one-off quarter, but the ROEs, ROAs, what can they look like in the next 6 months or so?
See, our ROA used to be 3.5% before we converted into a bank.
Yeah.
And our estimate was that after we become a bank, given the immediate influx of cost impact because of opening 400 liability branches, etc., there will be a time frame before the benefit kicks in. And the expectation was that our ROA would be about 2.5% in the interim period of maybe 2 to 3 years as the benefit of banking kicks into the system. But our third quarter ROA, if you look at it, was 2.04% because of that one-time extra provision of 15 crore that we did in the month of December. But if you adjust for that impact, our ROA continues to be around 2.5%. I think the entire expectation is that, our, as I said, 112 branches of liability up and running in December. By March, maybe 300 plus should be up. My first quarter of next year, financial year, most of the liability branch should be in place, and our cost should come into a steady state situation maybe by the second quarter of next financial year. Once the cost comes into a steady state, that is when you start seeing the benefit of the entire expansion into the banking arena, and maybe from second quarter onwards we should see some uptick in that.
Okay. All right, sir. All the best for the coming quarters. That's the word coming in from